I think all of these big blockchains will be worth multiple trillions of dollars because these are not single applications, they're entire networks of which you can build entire other businesses upon. These are immensely valuable things, but the applications haven't yet been built on it. So, yeah, I think you're dead right. This cycle is not where these things are going. I think this space goes from 2 trillion today to 100 trillion by 2032, 2034.
Raoul Pal, the CEO and the founder of Real Vision, has always been among the most outspoken supporters of cryptocurrencies and digital assets. Pal maintains his bullish view and predicts a large increase in the price of cryptocurrency assets despite the current volatility in the world markets. He has popularized the idea of the banana zone, an important phase in each bull market for cryptocurrencies, during which prices rise quickly and frequently double or triple the market capitalization in a short amount of time. Pal's banana zone witnessed Bitcoin rise from less than $1,000 to $5,000 in 2014, 2016 then from under $44,000 to over $60,000 between 2019 and 2021 during previous bull markets. Pal now predicts in the 2024-2025 bull market, Bitcoin will hit previously unheard of heights of $200,000, $300,000 before the end of 2025. This prediction is deeply connected to his everything code thesis, which links central bank money printing, currency debasement, and surging asset prices. In a recent interview with Skybridge Capital's Anthony Scaramucci, Raoul delves into the macroeconomic landscape and his optimistic predictions for cryptocurrencies as we approach 2025 and beyond. Let's hear what he has to say.
When you invest in the crypto asset class, you expect volatility. If I go back over all the years I've invested, most years you get 2, 3, or even 4 30% drawdowns. This one in Bitcoin has been 27%. It's kind of within the range of normality. And what you need to ask yourself is the main drivers of crypto are the business cycle, i.e. where are we with the economy? Well, we're starting to pick up slowly. Inflation's coming down. Rates are going to come down. Liquidity is going to come in. And so therefore, that's usually a very good time for crypto. So the tailwind is behind you. And the other thing, are people adopting the technology? Are things being built on it? And that's ongoing too. So when you see a news event like the last few days, driven by macro factors, you tend to think they're likely to be short term. Now, if the business cycle was getting old and the economy was starting to feel a bit more fragile, then yes, you might be worried about it. But this is early in the cycle, and generally you have to expect the volatility. And how I've always dealt with it is a Jedi mind trick, which is you look forward to it. When it happens, you can buy more. And you get to compound your returns much better than anybody else who just does nothing or tries to trade around it. So you should be thinking of these sell-offs as a gift, is, oh wow, if I can find a bit more cash, I can put it into the market. And you tend to do really well over the cycle by doing that strategy. Firstly, it depends when these events happen. If the economy is rolling over after you've had a strong period, inflation has been rising, the Fed are raising rates, if it happens then, it can risk turning into something bigger. When you're the opposite, which is the business cycle is just turning up now, the Fed are cutting rates, the probability of this being a bigger event is significantly lower. So from that probability, less so. The other thing is something happened in 2008 that has stopped a lot of this. In 2008, the central banks discovered the money printer. And the money printer, and you and I have talked about it on this show before, essentially is debasing the currency by printing more currency. Now, it's dressed up in a nice term called liquidity these days. It used to be quantitative easing, but they find different ways of doing it. When they print more currency, it makes the value of the purchasing power of that currency go down versus scarce assets. So it makes assets go up. So now every 4 years, in fact, that we've come close to something that could be nastier, they've started printing money. And it's not just the US, it's everybody, all the main central banks. And that has kept a bottom under markets. Even in 2022 was a bit trickier because we had inflation. So it was hard to print money. But eventually when it got to it, when the S&P was down about 30%, they kind of went enough's enough. And they started printing money again. So I don't think there is a lot to fear. In fact, I would be so outrageous to claim the probability of a down 50% market is now miles smaller than it was when you and I grew up, when it was a common occurrence that we would see it. We won't see this again because of the money printer.
Okay.
Doesn't mean it's a risk-free world, obviously, because when they print money, they're debasing your savings by 8% a year to start with. But if you think of that 8% cost of that debasement, that's like the central bank's buying a put option on the whole system, and it's costing you 8% premium a year. Put it that way, it's not the worst thing in the world, but it's never great.
Raoul Pal believes that everyone can benefit from central banks' continuous debasement of fiat currencies, which happens through periodic money printing, by investing in two key asset classes, tech stocks and cryptocurrencies. Tech stocks tend to outperform most other investments, while crypto significantly outpaces everything, including the balance sheet of the world's most powerful central bank, the Federal Reserve. Pal's optimism about liquidity and rising asset prices isn't just limited to the current cycle. As the Real Vision CEO and former Goldman Sachs executive explains, these regular injections of money by central banks will help prevent the global economy from experiencing severe downturns. Not only that, but let's return to hear Raoul Pal discuss ETFs and Solana. Don't forget to like and subscribe for more videos like this.
So we're exchanging a debt crisis for a slow debt crisis. The slow debt crisis is the printing of money.
Yeah, exactly.
So it's the 8% a year. So over 10 years, that compounds at 100%.
Yeah, your money's gonna be almost worthless. I mean, it's going down. I mean, it's terrible to see, right? I mean, somebody showed me a chart. It said this is the average house priced in Bitcoin, and the dollar was going up, but the price in Bitcoin was going down because the Bitcoin price is going up faster than the inflation.
Yeah, if you think of it, if you think of most asset prices versus this debasement, the S&P is doing about 8% a year since 2012, which basically just keeps your head above water. The Nasdaq's done about 17%, but Bitcoin's been doing 150%. And when you look at Nasdaq versus Bitcoin, the Nasdaq is down 99.97%. So it does do very good for your purchasing power, but this debasement is a real issue because most things just don't keep up with the debasement. So you're right. We're not going to have a massive debt blow up. What we're going to have is this ongoing bleeding of all of our purchasing power. The volumes in ETFs are driven by two: net inflows, or people known as arbitrageurs who are, arbitraging the futures market. So we don't know what that flow was. So they would sell the futures, which trade at a premium, and then buy the ETF. We don't know what that flow was, but let's assume it's net inflows because Binance saw record inflows yesterday as well. So what we're seeing is people, I think, because of the education that you've been doing, I've been doing, Michael Saylor's been doing, everybody's been doing, people are starting to understand the game. And even Larry Fink has been explaining the game. The game is the erosion of your purchasing power, not via traditional CPI inflation, but via this more pernicious debasement idea. And I think people are understanding and have been educated that this is a volatile asset class. And, as I started at the beginning of the show, is if we do get sell-offs, people are starting to realize that's when I buy. That same strategy worked incredibly well in the Nasdaq over the years as well. You've got a big secular trend. Any wobbles, generally a buying opportunity.
Solana.
Mm-hmm.
What do you think?
Solana is cheap, fast, and there's a lot of innovation coming. And we're seeing lots of nice, easy applications for people to use. So, what drives a blockchain use? Well, nice applications, easy use, and cheapness. So it's really, really blowing out all the metrics versus other chains right now, hence why its price outperforms both Bitcoin and Ethereum. So it's been definitely the big breakout of this cycle, and I think it continues because it's getting a lot of traction. It's just a very easy-to-use chain that's very fast, and a lot of the applications are just very user-friendly. I think all of these big blockchains will be worth multiple trillions of dollars because these are not single applications. They're entire networks of which you can build entire other businesses upon. These are immensely valuable things, but the applications haven't yet been built on it. So, yeah, I think you're dead right. This cycle is not where these things are going. I think this space goes from 2 trillion today to 100 trillion by 2032, 2034.
As Raoul Pal has laid out, we're not facing a sudden debt crisis, but a slow, insidious erosion of our purchasing power due to ongoing money printing. While traditional assets like the S&P 500 and Nasdaq struggle to keep up, cryptocurrencies like Bitcoin and Solana are outpacing everything, offering a lifeline in this challenging economic environment. With the understanding that central banks' actions are leading to this slow debasement, more investors are recognizing the value of these digital assets. As we navigate this evolving financial landscape, the message is clear. The old rules no longer apply, and those who understand the game will be the ones who thrive. Whether it's recognizing the buying opportunities in market sell-offs or embracing the potential of innovative blockchains like Solana, the key is to stay informed and proactive. As Raoul predicts, this space is set to grow exponentially, potentially reaching $100 trillion in the next decade. The future is digital, and it's unfolding right before our eyes. Until next time, don't forget to like, subscribe for daily videos like this. Happy investing!